July 4th, and Sunny and I want to wish you a happy July 4th. For most of you, I hope today is a day off. I hope it is a day full of barbecues and celebration. It is celebrating the 246th birthday of America, of the United States. It is about freedom. As we have undoubtedly learned again over the last couple of years, freedom isn't free. And sometimes we just need to be reminded of that. Sonny, go ahead. Have a seat. So again, it is July 4th. I hope you have an amazing day. This channel is about building wealth. It is about earning financial freedom. Without question, we are going to be going through a recession or a bear market where I am hoping you take advantage and get one or two assets on sale. If we have undoubtedly learned anything over the last several decades, we don't have really income problems. We have wealth problems. And wealth comes from ownership. If you're a part of my community, my hope is you do the work, whether you are a student or not, and you understand what an average deal is. I'm not in this business to ever do average deals. I want to do good or great. And to be very, very clear, between July 4th and this year and all of next year, good left the building. You and I have no idea how bad what is coming. So I want you to do only great deals. And if you are lucky enough, fortunate enough to be in a position to do 2 or 3 deals, please make the second deal better than the first. Make the third deal better than the second. Right? We are going to get through this together. I'm hoping you get some great assets, whether those assets be rental properties, stocks, whatever you dream of getting as assets. Ownership. Ownership is where wealth is built, right? It just income doesn't matter. Too many people inflate their lifestyle. So again, it is a day of celebration, a day of remembrance, a day of celebrating freedom. Freedom's not free. If you want financial freedom, the recipes are pretty simple. I bring you 7 or 8 millionaires every week. And the recipe is the same. Sacrifice, work hard, first 3 or 4 years, let momentum build, recycle capital, income snowball, and then hold on tight because it'll take you 8 to 10 years and you can earn it. At the end of the day, you don't have to hold on that long. You can simply get to 4 rental properties over a decade. Cash flow day one, great yield in your buy box, and you can change your lifestyle. It's up to you. You have to do the work. Freedom's not free. Freedom's not free. You must do the work. You must make a choice, right? So again, let's move forward. Sorry about that. So again, 246, I got to tell you, I would not want to try to blow out 246 candles. I don't think I could do it. That's a lot of candles. Yeah, a lot of candles. Anyways, what do I got for you today? So I just did a live stream on Phoenix housing market. I gave you lots of information. I'll just give you the highlights here. Active listings up 152% year on year, 50%, 52% month on month. Truly scary numbers. Monthly sales, again, I give you the whole breakdown, but monthly sales down 20% month on month. Folks, a housing crash in transactions is coming. The National Association of Realtors on July 20th, I've been telling you for a couple of days, it is going to be like an earthquake went off. Buyers disappear, sellers come in, totally disrupted market. Actually, that 20% was down year on year. My apologies, 7% month on month. Phoenix month on month. And then medium sales price. Lots of people want a price crash. I do not believe one's coming. There could be one in Phoenix, right? Local markets, very different. But we just had a sales crash 20% or 7% month on month. Phoenix real estate up 19% year on year, down 1% month on month for those looking for month on month data. And again, to give credit where credit is due, that information came from John Wake. He is a great follow on Twitter. Thank you, John, for all you do. And then he referenced Mike Orr. So I want to make sure I give Mike Orr a shout out. So again, Phoenix data, pretty scary. We go through all of it in the live stream that was at about 7 a.m. Peter Schiff. I don't know if you know this, but Peter Schiff has had, let's get the tense right, had a bank in Puerto Rico. Peter Schiff's bank has been shut down. Peter Schiff's bank has been shut down. Deposits, nothing can be withdrawn. People are going to lose money in Peter Schiff's bank. Lots of details, I'm sure, will come out. This just happened over the weekend. I found it pretty shocking. MeetKevin. I thought MeetKevin did one of his best videos that I have seen in the last year. I want to give him props, kudos. I do think it's the best video he's done. Which one is it? He did a video where I think it's a picture of a Bitcoin down 99%. I think that's the thumbnail. Anyways, he goes through a great montage of him interviewing these DeFi, bank people, right? He interviewed BlockFi and Voyager CEOs, and he cut in what he said, what he thought. Lo and behold, at the end of the day, you find out that MeetKevin, Kevin Paffrath, invested $460,000 into BlockFi as a venture capitalist, or not. He didn't own. He invested in BlockFi, a venture investment. That's what it was called, and he lost it all, or he lost most of it. I thought it was a great video. He didn't try to sell his courses. He admitted failures and mistakes. I thought it was. For me, it was one of the best MeetKevin videos because it was authentic and I didn't feel like he was trying to shove courses down my throat. So I wanted to, I call him out when I think it's off. So I wanted to give him kudos for that video. California is sending out inflation checks. Yes, King Gavin Newsom is sending out inflation checks to all California residents below $500,000. You're all getting inflation checks. Congratulations. He is sending out $9 billion in inflation checks. I wish instead of sending out these inflation checks, he would build reservoirs, dams, affordable housing. This $9 billion could be used to employ people who need jobs. They could be used to build infrastructure that we need. And oh, by the way, Mr. King Newsom, you are going to want that $9 billion back next year when our tax receipts disappoint you. You are going to have a very bad year collecting taxes. Have you not seen the stock market? Have you not seen real estate transactions crashing? You are going to be greatly disappointed. You're going to wish you didn't send these inflation checks. You can't make this stuff up. California is in a severe drought, and instead of building dams, because we actually get enough water, it's just intermittent. It's not predictable. So employ some people, keep the economy going, stop sending inflation checks. You're trying to buy votes. You freaking are running ads in Florida because you want to run for president instead of taking care of California. King Newsom, shame on you. Inflation checks are not a good idea. And then what I want to give you is some homework. And actually, I'm going to do this as a Zoom video later today myself. But I want to ask you, a watcher of my channel, or if you are one of my students, you absolutely should do this. What I want you to do is take one of the properties in your buy box, right, on your Excel spreadsheet. Any one of them you want, no problem. And then what I want you to do is I want you to do three things. It's actually a comparison. I want you to take that line. I want you to copy it 3 times. So there's now 4 lines. In line number 2, right, because line 1 stays the same. Line number 2, I want you to discount the property 10 grand, purchase price. If it's 200, it's 190. If it's 150, it's 140. Just take $10,000 off, see how that changes your yield. For most of you, that will change your yield very, 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 very slightly. Line 3, I want you to wipe out your closing costs. If you're buying a property, without question, you are going to have closing costs. Could it be 2 grand? Could it be 3 grand? Whatever. Let's leave the purchase price the same as line 1, so 150 or 200, but let's wipe out closing costs. Okay? And then watch how yield moves. My suspicion is yield moves more when closing cost is out. And then line 4, the final line. What I want you to do is I want you to remove closing cost, excuse me, 0, and I want you to lower the rate half a point. If you assume 6.5, make it 6. If you assume 7, make it 6.5. The whole idea is, what if we get the seller to pay closing costs or pay closing costs and buy down your rate instead of getting a purchase price reduction? Again, folks, in my course, what I teach, I want you to pull all of the levers. For most of you, and I will do this later and post it later because I could be wrong, we're going to find out what produces the best yield, right? What increases the yield? And my suspicion is getting closing costs and a buy down in rates. But we will do that together. Please do it. Post it in the Facebook. Leave comments below. What is the impact on your yield? I would love to hear it. All right. So what else do I got today? Lots of stuff going on. Oh, recession. I know this is going to be a battle. There's a lot of armchair economists out there who have repeated, and you have heard me repeat it, 2 negative quarters of GDP growth is a recession. As I said yesterday, the day before, that is not technically correct. There are sub-variables. It is a rule of thumb that is often quoted and not challenged because it is very, 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 very rare that is not the case. You have to go back to 1947. 1947. Frankly, that is before my parents were both born. That's how long ago this is. 1947, Q2 and Q3. Q2 1947, GDP was negative 1.1. Q3 1947, GDP was negative 0.8. It was not declared a recession. That is the last time this happened. I believe if next Friday, right, Friday the whatever date it is, like the 9th or something, we get a jobs number that is positive, right? The expectation is 250,000. Remember that. If we get a number north of 100 grand, I do not see the economists declaring Q1 and Q2 a recession because we would have had 6 months of positive job growth, even if we have 2 quarters of negative GDP growth. There are four components that these economists will look at that armchair economists don't talk about. One is employment. As I've said, if we have 6 months of positive employment growth, I can't see them declaring Q1 and Q2 a recession. 2, industrial production. What is going on with industrial production? 3, retail sales. 4, real incomes. These are all the factors that go in behind the GDP growth. All of this said, I believe we will have a recession this year. I've already told you I was wrong. I've admitted it. I think it will be real estate led, and I think it will be nasty Q3 and Q4 of this year. So it is possible we may have 4 quarters of negative GDP growth in 2022. I would not want to be a politician running for re-election in that environment. That would not be good. So again, if you are a home seller today, if you're trying to sell a home, I strongly suggest you make your property stand out. Offer closing costs and mortgage rate buy down. You have to stand out if you are selling today. Don't know if you saw this, but President Biden is already talking about finding a way to make mortgages cheaper for first-time homeowners and low-income home buyers. This stuff is coming. I suspect, given his attack on gas stations, that it is not out of the realm of possibilities that we could actually see price controls on gasoline. That would be a huge, huge mistake. But hey, we've done price controls before. It's not out of the realm to do it again. What do I got on page 2? Oh, apartmentlist.com and Zumper have said that apartment rents were flat. This is important because, again, what I think is coming is I actually think apartment rents over the next 18 months are down slightly, where single-family homes are up. I think the single-family home market is still very scarce for rentals. Lastly, comments about the Phoenix market, again, from Michael Orr and John Waite. I want to give them credit. We went from euphoria to panic in 3 weeks. June 25th was the highest week ever for new listings added to the Phoenix MLS. Folks, what we have been talking about, the real estate slowdown, the crash in transactions, the real estate-based recession of the second half, it is all coming. This information is not supposed to scare you. It is meant to inform you. It is meant to let you know that, yes, if you do the work, you can find a great deal. It is nothing to rush about. But it is something you should do the work, get informed, and move forward. So again, folks, I hope you have a wonderful day. I hope you celebrate July 4th. If you're around fireworks, go enjoy them. Be safe. Let's not start any fires. I'm in California every year. Somebody starts a fire with fireworks. Don't do that. Bad idea. All right, everybody, take care. We should be talking with Mr. Greg Dickerson here in a few minutes. Bye.